major averages closing at multi-month lows, the VIX finally closing above 30, and fear has returned to the market. I quantify it all on today's REKTelligence report. As a friendly reminder, everything in today's show is for informational purposes only. There is no investment advice given. All right, let's get into the show. Hey everyone, welcome. I'm Dave. This is the All Markets Report, where I quantify across asset classes with an eye to the week ahead. And by Friday's close, we finally got some fear into the market. I will quantify the VIX, some breadth measures with the S&P 500. We'll look at the Qs, SPY, and a lot more. Stay tuned. It's a stock market focus this week. Let's get right into it. I've got a daily chart of the S&P 500 or SPX. It goes back roughly a year, and you can see on the left-hand side the tariff tantrum and all that volatility. What you've got on the chart in terms of indicators are a very simple 20 MA. That's a 20-day simple moving average in blue. And on the bottom, my REKTelligence stretch percent indicator. And this measures the distance above or below the 20-day moving average and the degree of stretch, so to speak. So you can see a year ago, during this tariff volatility, we saw the S&P 500 get stretched roughly 10% below its 20 MA. This usually doesn't last very long, and we had a quick snapback. Right now, as of Friday's close, where we finally saw the VIX close above the 30 level, first time in roughly a year, we are 4.5% stretched below that 20 MA. This is not extreme, but it's more than usual. So let's quantify it. Traders, crypto is not a wild, unruly market. It's an asset class with 500% more time for price discovery and opportunity. My new course, Crypto Trader's Edge, is now live through Algo Advantage, one of the top quant pods and academies out there. A full systematic framework, backtesting, strategy development, validation, real edges with full code, not hype. Links in the description, or head to my Substack at REKTelligence. Now back to the show. Real quick for new folks, this is a key element of the charts to come, so I want to make sure everyone is on the same page. The REKTelligence score is an all-in-one score, 0 to 100, that looks at several dimensions that are very important to assessing a good trade, from profit factor, win percent, or hit rate, edge quality, return efficiency, and drawdown. Part of this return efficiency is measuring the efficiency of capital. How fast does capital turn over in an opportunity? All that is in the score. All right, let's move on. All right, we've got the S&P 500 here, 1990 to the present. That's how long we've had the VIX. And you can see 49 instances, and certainly total P&L is positive, 144 and change percent. We see profitable trades or hit rate, win percent, however you want to call it, 69.3%. Profit factor, very solid, 2.26, and it's a decent looking equity curve. Now, do these stats blow my mind? There, of course, are other stats I could go through. No. How do I know that? Well, look at the REKTelligence score, 59.9, call it 60. This is a 0 to 100 score. 60 is definitely better than average, but it's not super compelling. It's somewhat compelling. Let's look at the same conditions, everything the same except NASDAQ 100. NDX, here we go. And we can see REKTelligence score 55.6. It's a little under. Often you get a little improvement when you move to the Qs or the NDX over the S&P, but not in this case. 59 instances, hit rate drops a little bit, 66.1%. Profit factor just a hair south of 2. Pretty much the same, somewhat compelling, but not overwhelmingly positive. Let's turn to stock market breadth again, but with a new measure. This is the S&P 500 stocks above their 200-day moving average. And by Friday's close, this had dipped to just under 43%, meaning less than 43% of S&P 500 stocks are above their longer-term 200-day moving averages. So this is a longer-term breadth measure, if you will. Look at the chart on the bottom. You can see that blue line indicates where we ended the week. Again, just under 43%. But if you look back to the last bear market, 2022, which is on the far left, you see many times this occurred. And it makes sense, right? When this starts to signal, you're going to get many more signals. Why? Because a 200-day moving average takes a while to shift, to turn around. So you're going to see that reflected in the breadth measure related to it. So a lot of clustered signals in 2022 with this measure. And you can see most recently, roughly a year ago, the tariff tantrum, we had just 2 signals. And by the way, these all reflect a 10-day hold. That's what I'm about to measure. So let's look at this condition with the SPY. We've got 2007 to the present, only recent data, roughly 20 years, because we don't have this breadth data in TradingView longer than that, but it gives us at least an almost 2-decade perspective. All right, so 95 instances of this occurring. Total P&L solidly positive. The equity curve is pretty good looking at a glance. Hit rate 65.2%. Profit factor just under 2 at 1.97. Very similar to the last set of conditions we looked at. The REKTelligence score here for the SPY with a 10-day exit, that's what we're looking at, 46.6. It's not really mind-blowing. The average trade over that 10 days, 1.25%. I mean, it's nothing to sneeze at, but is it worth the risk? Drawdown here during the financial crisis, mind you, 40 and change percent, pretty rough. Let's look at this same condition with the Qs. We can see REKTelligence score does improve, 55.5%. And again, it's statistically significant, very important. 95 instances, again, 64.2% hit rate, profit factor improves 2.47. That is good. But again, I want to see those REKTelligence scores, those R scores in the mid 70s or higher. That is the sweet spot where I start to get really excited. Let's look at what if this measure deteriorates, though. Often that improves conditions, improves the odds, it improves the metrics, it improves the R scores. Here we go. S&P 500 stocks above their 200 MA. If it falls to less than or equal to 30%, look at that equity curve. It looks like noise. We can see the REKTelligence score is 14.3. It's not compelling at all. This is a bit of a concern, right? In other words, if there's further deterioration in this metric, this is the results with a 10-day exit for the SPY. That short-term snapback style window really deteriorates. We're kind of more in a sweet spot here as of Friday's close going into the new week, but further deterioration doesn't look that good. However, move to the Qs, it looks a little bit better. Total P&L over 53 instances, though, is only 20%. So the average trade is 0.62% in 10 days. REKTelligence score is 23.8, and it's not statistically significant. So much noisier if this same metric deteriorates. Finally, let's turn to sentiment. These are the current AAII sentiment readings. Basically, we want to see the inverse here. In other words, when individual investors get very bearish, also when they get very unbullish, that is when the market often will bounce. Now, we can see that the bearish figures are rising. Look at the right-hand side, that white box. That shows that red line has been rising. Individual investors getting more bearish. Also, that green line has been generally ticking down, although it did tick up slightly last week, interestingly. And that means that individual investors are getting less bullish. Let's look at the stats here with first the SPY. 52 instances historically, 2000 to the present, with the current AAII bullish bearish sentiment spread, again, as of Friday's close. Right away, hit rate is 50%, it's coin flip. Not necessarily a problem, but profit factor, only 1.275. 1 is the so-called break even between sum of gross gains and sum of gross losses. So we really want to be far above 1 if possible, preferably 2 and higher. We don't have that here. Average trade over this 10-day exit, 0.61%. Not really that great. And in fact, REKTelligence score 30.4 and statistical significance is no. This is not even statistically validated. So the edge is not here based on the current sentiment spread. What about the Qs? We can see REKTelligence score 12.4, not statistically validated. The equity curve looks like noise. Obviously here, again, we don't have an edge with the Qs, 2000 to the present, based on the current sentiment levels. So what is my takeaway here? If we see bearishness rise and investors less bullish, that is most likely going to increase the odds here. I will revisit that if it happens. Traders, if you're like me and seek to capitalize on market opportunity through quantitative methods, you might be interested in just getting on the list for a couple of products I've got rolling out in the next several weeks. Strategy Analyzer is an app for TradingView users, and it transforms the analytics into institutional grade visuals with Monte Carlo analysis, comparisons between strategies, and much more. And the Edge engine scans thousands of stocks and ETFs in real time, ranks by quality, statistical significance, of course, my REKTelligence score, and more. Sign up at tradingfromparadise.com. That's tradingfromparadise.com. Thanks for watching today's All Markets Report. I will see you on Thursday with the brand new Edge report, but of course, in between, Substack notes and elsewhere for my latest insights on market behavior. Until then, trade smart, live well, and cheers from the Caribbean.